I recently reread an article that my old boss, Juan Luis Perez, wrote for the Financial Times. JLP was global head of research at UBS, and he was a total legend. Anyway, the article really got me thinking about the impact of artificial intelligence on Wall Street. It's not just crunching numbers anymore, it's outperforming human analysts in ways that are both thrilling and terrifying. Today on Unlocking the Upside, we're diving into the AI revolution that's shaking up the financial world. As usual, I've got my partner in crime, James, with me to direct my ramblings.
Oh, that sounds fascinating. What kind of impact are we talking about here?
Well, we're seeing AI systems that are not just keeping up with human experts, but actually surpassing them in some pretty crucial areas. For instance, large language models are now achieving top scores in advanced macroeconomics, accounting, and statistics exams, the very foundations of investment analysis.
That's impressive. But surely human analysts still have an edge in some areas, right?
You'd think so, but the evidence is becoming harder to ignore. AI-driven systematic investment approaches are consistently outperforming traditional methods in many areas, particularly in routine analytical tasks and broad market analysis. It's like having a financial prodigy that never sleeps and can process vast amounts of information far beyond human capabilities.
So if AI is so superior, why isn't Wall Street fully embracing it? You'd think they'd be all over this technology.
That's the million-dollar question. Despite AI's proven capabilities, there's a surprising amount of resistance and skepticism in the financial industry. It's creating this fascinating disconnect between what AI can do and how much it's actually being used.
What's behind this reluctance? Is it just a case of, if it ain't broke, don't fix it?
Well, it's more complex than that. Research by data scientist Cesar Hidalgo reveals a fundamental asymmetry in how humans evaluate machine versus human performance. When we look at AI systems, we tend to focus intensely on performance metrics. Any error in prediction can potentially undermine confidence in the entire system.
Oh, I see. So we're holding AI to a much higher standard than we do humans?
Exactly. With humans, we consider things like intentions, relationship dynamics, and contextual understanding. We're more forgiving of human errors because we understand the complexities involved in decision-making. This psychological barrier is particularly evident in client-facing roles, where the ability to craft compelling narratives and show empathy often outweighs pure performance metrics.
That makes sense. After all, when you're dealing with people's life savings, that human touch can be incredibly reassuring. But surely the potential benefits of AI are too significant to ignore completely.
You're right, they are. But there's another challenge: the unique characteristics of financial markets. Unlike many other domains where AI has achieved success, markets are non-stationary systems where historical patterns don't guarantee future outcomes. Each market event occurs within a unique contextual framework, making it difficult for AI systems to fully capture the nuanced interplay of factors that drive market movements.
So it's not just a matter of crunching numbers and identifying patterns. There's an element of unpredictability that requires human insight and experience.
Exactly. And let's not forget that many financial professionals have developed strong market identities and analytical frameworks over years of experience. It can be challenging for them to integrate AI insights that might contradict their established viewpoints.
So we've got this situation where AI is clearly superior in many analytical tasks, but there are significant psychological and practical barriers to its adoption. What's the way forward? How can the financial industry navigate this complex transformation?
Well, it's going to require a sophisticated adaptation framework that acknowledges these challenges while leveraging AI's capabilities. First, financial institutions must develop hybrid models that allow for meaningful human agency within AI-driven systems. This could involve creating interfaces that enable professionals to adjust certain parameters or incorporate contextual information not available to the AI system.
That's an interesting approach. It's like finding a middle ground between pure AI and pure human decision-making. But wouldn't that potentially reduce the effectiveness of the AI?
You're right, it might result in some performance trade-offs, but the increased adoption and trust could ultimately lead to better overall outcomes. It's about finding that sweet spot where we can leverage AI's analytical power while still maintaining the human judgment and intuition that's so valuable in finance.
I see. So what other steps do you think are necessary for successful integration?
Well, the industry needs to focus on making AI systems more explainable and auditable. The emergence of chain of thought logic in advanced AI models offers promising opportunities to codify expert knowledge in ways that professionals can understand and trust. This transparency is crucial not only for regulatory compliance, but also for building the confidence necessary for widespread adoption.
That makes sense. Regulators are going to want to understand how these AI systems are making decisions, especially when it comes to high-stakes financial transactions.
Absolutely. And this ties into another important aspect of the transformation, the evolution of financial professionals' roles. Instead of focusing solely on analysis, they'll need to become adept at combining AI-driven insights with human judgment and relationship management. It's almost like they're becoming interpreters between the AI and the clients.
That sounds like quite a shift. It's going to require a whole new skill set, isn't it?
You're right, it is. We're talking about new training approaches and organizational structures to support this kind of human AI collaboration. Financial professionals will need to understand not just finance, but also the basics of AI and data science. They'll need to be able to critically evaluate AI-generated insights and explain them to clients in relatable terms.
It's fascinating to think about how this could change the face of Wall Street. Do you think there will be resistance to this evolution in professional roles?
Oh, undoubtedly. Change is always challenging, especially in an industry as established as finance. There might be fears about job security or concerns about the devaluation of hard-earned expertise, but the firms that can effectively combine AI's analytical power with human expertise and relationship skills will likely be the most successful moving forward.
So it's not just about adopting the technology, it's about adapting to a whole new paradigm.
Yeah, it's massive. Okay, I want to take a quick break to tell you about Insight One, the investment education platform I've created. As many of you know, I've spent my career as a Wall Street analyst, and yes, I was fortunate enough to be ranked number one by Institutional Investor 10 times. But what really drives me is sharing this knowledge with investors like you. Insight One is where I brought together everything I've learned about markets and investing, combined with powerful technology to make it accessible and actionable. It's the same level of analysis I provided to major financial institutions throughout my career, now available right on your phone. And if you've been enjoying the insights from this podcast and want to deepen your investment knowledge, Insight One is the next step. You can find us on the App Store, on Google Play, or on our website, theinvestmentanalyst.com. Now let's get back to our discussion.
So picking up on your previous point, how long do you think this transformation will take?
That's a great question. This transformation seems inevitable, but it's clear that it won't happen overnight. It requires careful consideration of not just the technology, but also the psychological factors, professional dynamics, and client needs. We might see a gradual integration of AI in some areas, while others might experience a sudden tipping point where adoption accelerates rapidly.
Interesting. Are there any particular areas of finance where you think AI might make the biggest impact first?
Well, we're already seeing significant AI adoption in areas like high-frequency trading and risk management, but I think the real game changer will be in areas like investment strategy and financial planning. Imagine AI systems that can create personalized, dynamic investment strategies that adapt in real time to market conditions and individual client circumstances.
That sounds incredibly powerful, but it also raises some ethical concerns, doesn't it? How do we ensure that these AI systems are making decisions that are in the best interest of clients, not just maximizing profits for financial institutions?
You've hit on a crucial point there. The ethical implications of AI in finance are enormous and will need to be carefully addressed. We'll need robust regulatory frameworks to ensure transparency and accountability. There's also the question of data privacy and security. These AI systems will be processing vast amounts of sensitive financial data.
It sounds like regulators are going to have their work cut out for them. Do you think they're prepared for this AI revolution?
That's a great question. Regulatory bodies are certainly aware of the challenges posed by AI in finance, but they're often playing catch-up with rapidly evolving technology. We're likely to see a lot of debate and policy development in this area in the coming years. It's crucial that regulators work closely with both financial institutions and AI developers to create frameworks that protect consumers without stifling innovation.
This whole transformation seems to be walking a tightrope between innovation and caution. On one hand, we have the incredible potential of AI to revolutionize finance, and on the other, we have very real concerns about trust, ethics, and the human element of financial services.
You've summed it up perfectly. It's a delicate balance, and how well the industry navigates this transition will shape the future of finance for years to come. The firms that can successfully integrate AI while maintaining client trust and regulatory compliance will be the leaders of tomorrow's financial world.
Well, it's certainly an exciting time to be in finance. Any final thoughts on what this means for the average person and their finances?
Well, in the long run, this AI revolution could lead to more efficient markets, better investment strategies, and more personalized financial advice. However, it's crucial that as consumers, we stay informed and ask questions about how our financial data is being used and how decisions are being made. Financial literacy will become even more important in this AI-driven future.
That's great advice. It's clear that the integration of AI in finance is not just a technical challenge, but a societal one that will require ongoing dialogue and adaptation.
Absolutely. And on that note, we'll wrap up today's episode of Unlocking the Upside. We've covered a lot of ground today, from the superior capabilities of AI in financial analysis to the psychological barriers preventing its full adoption and the complex path forward for the industry.
Thanks for joining us on this deep dive into the world of AI and finance. Until next time, keep questioning, keep exploring, and keep listening to Unlocking the Upside.
And remember, in the rapidly evolving world of finance and technology, staying informed is your best investment. We'll see you next time on Unlocking the Upside.